Welcome. If you are a returning viewer and you watch me regularly, thank you and welcome back. I have been doing a lot of videos showing numbers at 50 and 75%. And I get a lot of people who are saying, how are you getting 50%? How are you getting 75%? Those aren't real returns. You can't get that investing in real estate. You absolutely can, and I do all day long. I don't look at investments that are going to be less than 50%. I'm just not interested. That's because I have investments that pay easily over 50%, even easily over 75%. And I'm going to go over some of those actual properties that I reviewed this morning as part of my normal process as a real estate investor. So it is Monday, November the 25th, 2019. These are properties that I literally pulled off of the MLS today, or that a real estate agent sent to me from the MLS, that are actually available for purchase today. These are the actual real conservative numbers that I use on these properties to calculate what my ROI is going to be. Now, I use conservative numbers because if I can make money using conservative numbers, I can sure make money using the actual numbers. So I want you to pay close attention because these are real properties, real numbers. And then you can see how I say you can easily get 50%. You can easily get 75%. A lot of these properties are actually getting well over 75%. I chose 6 different properties, but in order to keep the video short, I'm going to do 2 at a time. So this intro is going to be exactly the same for all 3 sets of properties, but we're going to do 2 properties for each video to keep it short. The first set of properties we're going to go over, as with all the properties actually that we're going to go over for this market, are multifamily properties. That is our primary strategy for this market. We can find great commercial deals in this market as well. We can also find great multifamily residential properties that are larger, but I'm going to base this on, say, a beginning investor, but also bread and butter. I've been doing this since the mid 80s, and I still buy these properties all day long. These are properties that I am actually making offers on. These are properties that, as I said earlier, are available right now. This is the typical property we're looking at in this market. It is a 6-bedroom, 2-bath duplex. If you look at the 3rd floor, you can see it is a full-size 3rd floor. We typically will find that there's 2 bedrooms, sometimes more, sometimes less, but typically there's 2 bedrooms on the 3rd floor. So the 1st floor unit will have 2 bedrooms, and the 2nd floor will have the 2 and the additional 2 for the 3rd floor, making it a 4-bedroom unit for a total of 6 bedrooms, 1 bath on each floor. Actual numbers on this property: a $6,000 down payment was able to get this property. The gross rents on this minimum. Now, this will probably have larger gross rents than $1,200. And after I have a accepted offer on this, I will send my property manager over to take a look at the property, and they'll be able to tell me exactly what we'll be able to get for rents. But I know, based upon where this property is, that my minimum, in fact, my minimum in this market for that size property is going to be $1,200 gross rents. So that is a minimum number. So when I say I'm working with conservative numbers, I'm absolutely working with conservative numbers here. The mortgage is going to be $123. That is based on 5% interest rate. Could I get less? Yes, and I probably will, but the average investor will easily be able to find a loan for 5%. My management fee, I'm basing that on 10% of my gross rents. My property manager actually charges less because they've got a lot of properties, but for the starting investor, plan on 10%. So putting 10% there at 120. Insurance and taxes are both at 100 each, but those are both high. Property insurance for this last year will make that less than half of that, if it's any indication of what we're going to be paying moving forward. I don't know what the county will assess this property at once I purchase it, so I'm going to leave it safe in the $100 a month range, but I expect it to be closer to $30 or $40 a month to be realistic. Insurance is going to be probably close to $60. So there's going to be money left over there.
that's fine. I always calculate higher. I throw that into my maintenance so that I have it available whenever I need that. $150 a month in maintenance. This is going to cover any maintenance costs that I have. It's going to cover someone to go over there and mow the lawn, and if we have any snowstorms, for someone to go over there and shovel the snow. Vacancy factor is $72. It's based upon a 6% vacancy factor, and we have a total of $535 a month in cash flow. That is going to be $6,420 every single year in cash flow. If you do the math on that, that is a 107% annual ROI. So when I tell people that there are markets where you can get 50 and 75% and more on your annual ROI, these are the types of markets I'm talking about. This is a real actual property, real actual numbers. Let's go ahead and move on to the next property in this evaluation. You can also see the snow on the ground in this one. There is snow last week in this market when these pictures were taken. That is how current these pictures are. 6-bedroom, 2-bath duplex. Again, same scenario. You see that full-size 3rd floor. That's an attic. This is a larger house. You can probably tell by looking at the picture. It is also in a different part of town. The rents are going to be a little bit higher here. I know that my minimum amount of rents that I'm going to get for this property is going to be $1,400 a month. That's my minimum. Again, I expect I can get more, but I'm going to base it on my minimum. Mortgage on this property is $177 at 5% interest. My management fee is going to be $140 to my property manager. Again, insurance and taxes are going to be high. That's fine. $150 a month in maintenance. My vacancy factor is $84, giving me a $649 a month monthly cash flow for $7,788 as my yearly cash flow. That is an 86.5% annual ROI. So remember, I keep saying 50% and better, 75% and better. This property doesn't sound as good as 107%, but at 86.5%, this is better than what a lot of other investors are seeing at 20% and 30% that they're happy with. So these are real numbers, real markets. This is a market that we go to for our real estate buyers event. If you want to join us on a real estate buyers event, these are the types of properties that we will be looking at, evaluating, seeing in person, and the attendees of the real estate buyers event are encouraged to make offers on these properties. We're going to teach you how to do everything you need to do in this market, how to build a team in that market, where the resources are, how to evaluate the property, what the real estate strategies are for that market, and even where to find tenants. It's a no-brainer as far as I'm concerned. That's why I built these buyers events, because we literally take you into the mouth of the beast, show you how to do everything you need to do to be successful in that market. So if you want to build your portfolio with performing assets, whether you are just starting out or whether you are a seasoned investor, this is how you do it. It is a small fee to pay to learn how to tap into these markets, which are going to give you huge cash flows. If you have any questions or want to read more for yourself, check us out, Kevin Mills Now, millsuniversity.org for our online courses. Follow us on Facebook for regular updates. This video and others can be found on our YouTube channel, Instagram.com, Twitter.com. Follow us both of those. And I look forward to hearing about your investing successes. And I look forward to also seeing you at one of our future buyers events. Happy investing.